But let's get talking about your personal finance queries. Harsh Roongta of apnapaisa.com joins us to talk about that. And a very interesting discussion is what is lined up. The normally accepted mantra that high risk is always accompanied by high returns has been challenged in the recent past. Harsh, hi, good afternoon and thanks for joining in. In your experience, do you think this always holds true? Because we have seen a lot of investments into the infrastructure, real estate space in the equity markets not yielding with high returns at all.
Yeah, well, I think the point is that any investment has three parameters: risk, return and liquidity. So if you want low risk, it is necessarily accompanied by low return. If I want to invest in, if I want the low risk of an SBI fixed deposit, I am not going to get high returns. If I want high returns, it is invariably going to have much higher risk. Obviously, infrastructure or the other investments that people have made, those were high risk investments and they have not paid off. At least so far they have not paid off. So I think that actually goes to prove the fact that when the returns expected are high, it is accompanied by high risk. There is no instrument that can defy this economic principle. It's a very basic economic principle.
Okay, Harsh, hold that thought. We'll talk more about it and get some more ideas from you. We'll take a break and we'll solve a couple of your personal finance queries with regards to this particular theme on the other side. Hi, welcome back. It's okay for the market, so we are still status quo, holding at 5,700 for the Nifty. Let's continue our personal finance segment with Harsh Roongta, who's going to take us through the benefits of a possible risk-reward scenario. And we have an SMS query this time round from Rachna Kumar from Bhopal. She says that she has received an offer to invest in a pre-sale property, whereas she has been promised a guaranteed buyback at double the price after 4 years under a proper stamped and registered agreement with the company. She now wants to know if this is a possibility in terms of an investment option for her. Harsh, would you like to comment on that?
Well, I think this is a perfect example. I mean, doubling of your money in 4 years, that's roughly, 18% per annum compounded return. Now, you don't get that kind of return without some risk. Yeah, sure, the return of the money, as she says, is guaranteed. There is a proper agreement. There are probably lawyer stamps all over the paper. But who's guaranteeing the guarantor? I mean, obviously, if it was so safe, they would not be offering 18%. So I think the point that Rachna needs to realize is that this is an investment that's riskier. She needs to evaluate the risk. She should not get in saying because it's guaranteed it is low risk. It's guaranteed by somebody who you need to evaluate. So if that guarantee is good enough, if she feels it's comfortable, and it can't be all that great because obviously otherwise you would not get 18% return. So as long as she goes into it with her eyes open and on a certain percentage of your portfolio, you could probably take higher risk, especially if your portfolio is higher, then maybe. But I think like any other lay consumer, Rachna is unlikely to have the stomach for high risks, and if she does not have that stomach, I don't think this would be the right investment for her.
All right, we hope Rachna Kumar was listening in to that. Thanks so much for joining us, Harsh, and giving us all that opinion. That was some of your personal finance queries addressed. We'll take a short break. Some news on Strides Arcolab, where they've gotten a US FDA nod for a generic Fludara injection. The stock is up about 1%. When we come back, we'll shift focus to the global markets. There's been a big risk on in global markets. We'll get the European market cues as well, and Jason Hughes of IG Markets will join us to tell us what to expect. Stay with us.